Hello, hello.
Pete Money the Great.
Hey, how you doing?
I'm doing great today, brother. How you doing?
Man, I'm good, man. You back in action, man. You back. It's the real beat. You back.
Yeah, man. I don't know if I said it in the chat, but when I said like the market's back, I meant the market was back, brother.
Nah, I didn't hear you say that. I didn't see you say that one.
I don't know if I said it in the chat. I don't think I did, but yeah, about last week is when I finally realized it was time for me to actually start trading, because the market actually was making moves and it wasn't as choppy and all that. And I was like, okay, great. We're back in this thing.
Man, that's nice. It's good to see you back on your stuff. It gives me motivation because I'm almost there.
Yes, sir. You on your way?
Yeah. I took the
money behind the P for a reason.
Yeah, nah, for real, man. I ran it up in real estate, but I'm gonna run it up in here, man. I'm gonna run it up in here, man.
Definitely.
It's different. It's different. You know it is. It's different.
It's definitely a learning cycle. But once you learn it, then you end up having it for life. This is a skill that will forever, can take care of you. So,
man, I need to see your trades, man. I need to see that GJ trade and that GU trade you took.
Cool. Let me pull up my
I believe that's the only two trades I seen. That was nice, real nice.
So Calvin, what's going on, brother? How you doing?
Hey man, I'm doing good. How you doing?
I am doing great. I can't complain today.
Good to see you.
The market is doing what it does today for me.
Yeah, GU and GJ. Yeah, that's what she showed.
Did you take a trade on GU?
Yeah. Mm-hmm.
Oh, and EU. Oh, you can show EU when you get a chance too.
And
when was EU? Last week?
Yeah, maybe it is that. It was 2-9. What is that? That's Thursday.
Oh yeah, that was last week. Okay. So
back.
Before we had broken through, my directional bias was that we were going upward, coming into a 4-hour supply.
Mm-hmm.
Then hold on a second. From a 15-minute perspective, price had made this 15-minute zone, but I know something I'm missing. Hold on a second. Cool. But price had made a news candle right at Frankfurt Open. And
so I know sometimes you tell me, okay, this is a news candle. So sometimes you don't give it that much weight, but you gave this one weight. Like you cared about this one.
It was the unemployment rate. That's one of the most important factors of an economy.
Okay.
So had got to figure out that one.
Okay.
Like that, there's about 6 different factors when it comes to fundamentals that are important, and unemployment is one of those. So that's going to make the market move. GBP is the fourth most traded forex currency. You have USD first, JPY second, and then Euro third, and then GBP fourth. So that's enough to cause a market momentum. And unemployment rate, if I remember, came in right on target. So it's just enough to shock the market. But I had to wait until market cleared out in the news range. Price came back, tapped into my POI, and I ended up getting my setup based upon, it looked really ugly when I looked at it, but it made a move like this. It gave me a pullback, and then I took my trade.
Well, where did it give you? Where did you take a trade?
Right there.
But the pullback is down there. It's down. So so you took it after the pullback? Okay. So and then this is obviously the 15 second. Okay. So it did a small chop then, right?
Yeah. So it chopped right here. And then, no, sorry, it made a BOS right here. And then it made a chalk right here.
15-second chop.
Mm-hmm.
And then everything before that is there's no chalk in there, like a little bit to the left. There's no chalk in here.
Yeah, there's a chalk right here.
It just didn't hold, right?
That wasn't valid for me.
Not
according to my rules. That one wasn't.
I see like I've noticed like see the one that's not valid for your rules. I see those are like big candles, and then right there when you took your trade, like the candles get smaller. I've been seeing that with like the pairs, like it'll be big candles, and then when it's time for the real move, it'll start doing small candles, waiting for a reverse or something.
That's usually a sign of reversal. That's a sign of momentum. Size of candles determines who's winning on what side. So it's a confluence that you can use. But if I was seeing large candles continue to push down, then I'd be really concerned. But it was a really choppy looking move anyways.
I would have taken that and took a loss.
You said what?
I would have taken that and took a loss. The one that you were just talking about.
Oh, the other chart?
Yeah.
Do you trade on a 15-second?
Yeah, I do.
Oh yeah, you would have took it there. See, on a 1 minute, I reviewed his trade. On a 1 minute, I wouldn't have taken a loss because I see what the pair does on the 1 minute. But yeah, I don't even touch 15-second.
Yeah, time frame doesn't matter, man. It really doesn't.
Well, to me, it does. I can't, Brian. I'm not ready for 15-second. I'm not ready.
Most people aren't. I don't advise people to be on 15-second until they've been trading for a year on the 1 minute. But time frame, the lower you go in time frames, the more busy the price action is. So if you don't have solid rules, you're just going to wrap up losses. So, but yeah.
And what is your stop loss? What's the
Bro, I do not check my stop loss. I know you ask that question every time. I don't know. I really don't. I don't ever check.
Okay.
It's irrelevant. The stop loss, the size of your stop loss only determines how many pips do you need to get to a certain risk to reward. If you have a larger stop loss, it's going to lower your risk to reward target usually based upon what the average of what price is going to move. If you have a tighter stop loss, it just increases your risk to reward within the same move. But I don't have a set stop. The market determines my stop every single time.
I totally understand. But is this where you exactly enter? Do you know if this is where you exactly enter?
I'm close to it. Something around there.
Oh, can you go back to the 15-second, please? Okay. Why did you put your stop loss where you put it at? Like, why is it way down there?
Because it's according to my rules on stop loss placement.
Okay. Can you explain that, please? Like,
when it comes to your stop loss, you need to give your trades room to breathe. Tighter your stop loss, the more susceptible price is to getting hit.
Yeah.
So I just took my stop loss with some room for my trade to breathe. So if it came back, it was likely not to hit my trade.
Like, okay. I was thinking like maybe the thought process you put it like under the wicks, but like something like me, I guess I would just put it like below this the low of everything.
Here?
Yeah.
Yeah, that is a valid place to put your stop loss because structurally if price goes below here, it's going to reverse the market structure. So that's a valid place.
Yeah. Cool.
But wherever you decide to put it, you need to give yourself room to breathe on your trade, whether it's behind a fib, whether it's behind wicks, whether it's behind it. But I always take my trade and I always apply room for my trade to breathe. And I'm always calculating whatever spread is for that pair that I have. I give it a multiplier and I give it a multiplier so that I could like the chances of me getting hit based upon it being wick and then going in my direction, but me being taken out is very slim to none.
Mhm.
But yeah, you gotta give your trades room to breathe. That's most important.
Exactly. And you're using your EA obviously, right?
Mm-hmm.
And then how you use your EA, you just move the stop loss cursor down or up, right? And then you take it.
Kinda. I use the hotkeys function now that they just added. So I just click where I want. I have my settings set in a certain way where I just click where my potential entry zone is, and it already knows to give the spacing that I need in my stop loss.
Wow, you lying. That is tight.
Mm-hmm.
So wait, so wow, that is precise right there.
Mm-hmm.
That
Yeah, I
is
specifically asked them for that, and they added it for everybody.
so wow. So you're telling me you know where you want to take a trade and and wow. So you know where you want to take a trade and you can just like at a click of a button, it'll adjust your stop loss for you.
Mm-hmm.
That's nice.
Rob, excuse me, sorry, I didn't mean to interrupt, but what are your rules? Like, how did you avoid that earlier shock? Or were you just waiting for a specific time?
Because we never cleared the range caused by news.
We never cleared the range caused by news.
You said what?
You said we never cleared the range caused by the news candle.
Yep, that's the news candle.
So when there's news, you have to clear range. You have to clear it. You expect that to be clear.
I don't have to, but I do. Because when I know that when there's news, I'm not going to take trades anywhere where there's a range of news because I know what happens in the price action between the news. It's always the same every time.
And you back tested that, right? I assume so.
Yep.
Damn.
So the chalk that y'all were talking about occurred somewhere right here, but before the candle closed.
Exactly.
And because the candle hadn't closed on my trading time, my middle time frame, my rules tell me I can't take the trade. That's why I avoided the loss.
Yeah.
Because I know inside of a news range, all price does is consolidate.
Yeah, it's almost like fake price, isn't it? Like
It's a fake volume. And news isn't real momentum in the market. News is caused by a temporary event. People take profits, then the market takes forever to recalibrate itself until it breaks the range. I've seen it 100,000 times in back testing, and then I just made rules to say, all right, I'm not taking trades in this range. So until price closed on my middle time frame outside of this range, I had no trade opportunity. I wasn't even looking at the entry time frame.
Yeah, I did that today on gold too.
Yeah, you gotta be careful. It happened on GU today. After it happened on GU and EU after the news, the CPI news. There was a 12 R I could have taken on EU that I didn't because I wasn't looking at the charts. And there was another 7 R I could have gotten on GU.
Buy or sell on GU?
Sell.
Mm-hmm.
But the market is determined. None of us on this phone call moves the market. None of us in the precision markets community moves the market. None of us across the internet of people who are retail traders move the market. We make up only 4% of the market at max. The market moves $7.8 trillion a day. Therefore, if you want to be on the winning side of a trade, you better hope and wish and pray that the banks are going your direction. So if the banks aren't in the market, I'm not in the market. If the banks have a fake move and they're getting out, I get out. I'm riding their waves. I'm not riding anything else. And the context clues is based upon the market. So what I'm getting at is if you don't have momentum, it doesn't matter what setup you have, doesn't matter what kind of chalk you have, it makes no sense to take the trade. And you have to wait until where the points where momentum could enter the market. This was a demand zone. It was a demand zone that was partially caused by news. I know the safest place to be is outside of any fake momentum movements. So you have to be careful of zones created during low momentum. You have to be careful of zones created during news because they're not always valid for trading. Like it's a context you have to apply to just looking at candles. It's not just looking at candles and waiting for a setup to come. It's knowing when the market actually has momentum and movement in the market and where other people are interested. That's the reason why all this trading strategy is not going to die off in the next 100 years, because psychology of humans has been the same for thousands of years. That hasn't changed. So my goal is to ride waves and see moments in the market where I see momentum going in a certain direction and riding that wave. That's the whole point, in my view, of what you use technical analysis for. Because I knew also that this was a news range. If price was to go anywhere, it logically has to continue in order flow that direction, which it did. Also, because I knew what we were on the 4-hour time frame, it was likely to possibly go through and break this high, which it almost did. So I just kept holding. I didn't have a reason to exactly close my trade because I knew that we were going to get some type of boost. The information came in really good for unemployment rates. So they're expecting also inflation to drop today. It did not. It dropped, but not by as much as they thought. So after I kept holding my trade and seeing that, price wasn't going back, I just kept holding. And I just kept holding and kept holding. And I usually cut off my trades around 15R now because I don't really care to make too much more over 10R in a day. So just got to 15R, went ahead and closed it. Price would have gone up if I kept holding, I think, over about 30R if I held it all the way up to news. So
I have a question.
Can you show us JG, please? GJ.
Let's see. My directional bias for GJ was that we were going upwards, and being that we were inside a demand zone yesterday. So popping into 15 minutes, I saw that price get tapped in to the zone here. So we had a demand zone, wasn't created by news. We had our attention side. I think this was 30.
You said it wasn't created by news?
No, it wasn't.
Mm-hmm.
And then price. Is this it? Yeah, this was it. Yeah, price ends up making additional, I think first BOS after a chalk. Price gave me an entry point here, and I took the trade.
Yeah, this is the one I was going to ask you about. So you didn't, because I know you take trades inside your zone, and this one wasn't inside your zone and left your zone.
That's not true, bro. I don't take trades inside my zone. I take trades after the origination from a zone. I don't just take trades in the middle of nowhere. Like it's more logical than that. If price is going to continue upward on the 4-hour, like this is the part I think people miss about market structure. If price is going to continue upward on the 4-hour, that means we're going to see a bullish candle, right?
Mm-hmm.
But what is inside of a bullish candle?
BOSs.
Which is what?
Supply and demands.
Which is what from a structure standpoint?
Higher high, higher low.
Market structure.
Uh-huh.
So if price makes a higher high here, we came from making a higher low. What is the next logical thing it's going to do?
Higher high.
Before that.
If price makes a higher low, it's going to make a higher high.
I said it made a higher high. What's it going to do next?
Higher low.
So if it's going to make a higher low, it's got to tap into a what?
Demand.
Exactly. So price has to originate and start here. Whether I take the trade exactly in the zone or out the zone is based upon what I see inside of these candles.
Yeah.
Price is fractal. So all you're doing is going from one time frame to another and looking at microscopically what happens on a lower time frame. That's it. So it doesn't have to be in the zone. It just has to start from the zone.
Exactly.
Because logically, if price is going to continue going upward, on the 4 hour and making bullish candles on the 15-minute, it has to make BOSs, like you said, which means it has to make higher highs and higher lows, which means it's also going to print bullish candles. And bullish candles on the 15-minute, when you go down to a 1 minute time frame, looks like what?
You said, what'd you say?
Bullish candles on a 15-minute time frame look like what on the M1?
Higher high, higher low.
The same thing that we just talked about from the relationship between 4 hour and 15 minutes. It's BOSs, it's higher highs and higher lows. Like market structure is a universal concept. It works on every time frame of what you do. Like all my trades look the same. Not exactly like the same, but they're the same concept every single time. Never does it vary. Never does it vary. It's the exact same entry model. It's the exact same reasoning. It's the exact same process every single time. All I'm applying is market structure at every level.
Yeah. So, how's that 2 minute time frame working for you? Are you checking it out, or how are you doing it?
I don't use it. I would use it if I was using H1 POIs right now, but I'm not.
Okay. I've been using the 2 minute a little bit, just a little bit.
I like it. I like it whenever there's a relationship. What you have to remember is there's a relationship between time frames. So I said, when we look at the 4 hour candle, I want to see what's going on in 15-minute, because 15-minute is a microscopic view of what's going on in the 4 hour.
Yeah.
I go from 15 minutes to sometimes 15 seconds, 30 seconds, or even 1 minute, because those are also microscopic views of what's going on. So there's a relationship. I don't really use time frames that are too close together because I don't get the view of what's going on. The more microscopic I go, the tighter my stop loss can be. But if I go too small, then I start getting a whole bunch of fake outs, because it ends up being like a big thing. Like, for instance, if a tornado took over 5 states in the United States, but you were in one small city, yeah, they would say that your house is going to get destroyed, but probably not, because you're in such a big area, you really can't feel, you won't feel the tornado. Tornado might be in a whole nother state, but its effect may be covering you from a long period, and you just might get some rain. So you can't go way too small.
Got it. Are you using MT5 or MT4?
Both.
Well, what do you use more?
MT5, but I use MT4 for prop firms. I mean, it's really not that much difference between the two, honestly. They're both kind of the same.
Calvin.
Oh, somebody just asked a question. I didn't see who. Oh, Calvin. Go ahead.
Yeah, can you hear me?
Yep.
All right. So when we ask the question, are we trading correctively or impulsively? Like, how do you answer that question on the charts? Because you said that, higher time frame tells us if we are impulsive or corrective, right? But I always looked at it as we made a chalk, or for example, we made a chalk inside a daily demand. Now we can assume the impulsive move has started, and I did that by looking at the trading time frame, didn't I? Would you just say, like, if you're trading, like, if it's impulsive on the higher time frame, that means structure printed, right? And use the 5 candle pivot method.
Well, no, not exactly. So it goes back to what's called expectation order flow. So price made a higher low, price made a higher high, price made a lower low, but price made a higher high. In this example, that's still a continuation of a bullish trend because it failed the reversal. All right. After the higher high has been created, what do you expect to happen next?
You expect a higher low to be created.
Okay. For price to go from a higher high to a higher low, what direction does it have to go in an uptrend?
Down and corrective. Like,
okay, what phase is that?
It's the corrective, like the
okay.
Yeah.
So we don't know where that's going to be. So I'm just drawing an arbitrary point.
Right.
For price to continue in a uptrend, what has to happen?
Well, it needs to make a higher low. It needs to chalk inside a demand, a higher time frame demand.
Not necessarily. Well, yes, true. But the more important thing, what sustains an uptrend?
I don't know.
Price making BOSs.
Okay.
So that means it has to make a what?
A higher high.
Correct, right? So if price comes into here and we know that this is the corrective, then I'm expecting for price to leave out of here, make a BOS and go and have what trend phase?
The impulsive.
Right. So in order for that to happen, what has to happen on a microscopic level somewhere down here?
That's where you would get the chalk, right?
Exactly. Then what has to continue after chalks?
Well, the expectation, like that you're going to make a higher high.
But how would you do that on a lower time frame?
You'd be making higher highs and higher low.
Which is
A bullish trend phase.
But it is causing what every time a higher high gets broken?
A BOS.
Good job. So because I go down to the 15-minute time frame and I can see, oh, price made a chalk, price made a BOS, price made another BOS, my expectation is price is going to continue making BOSs and continue making BOSs and continue making BOSs and continue making BOSs until it breaks eventually.
Until it what?
Until it breaks the higher high. Now, it may come back and it may chalk and come back a little bit, but has my trend phase changed, Calvin?
No, it hasn't. Just your order flow changed.
Exactly. So I'm not going to trade that. I'm going to wait.
Right.
And as soon as I see everything aligning to what I see from the higher time frame, I take the trades. And that's where we get the highest probability trades.
Yeah.
But what you will hear me say is I always say higher time frame directional bias. My higher time frame directional bias is the same thing as our trend phase.
Got it.
Does that make sense?
Yeah, it makes perfect sense.
Yeah. So you have to have a bias to start the day. And let me tell you why I have a bias and it's not, I don't call it the trend phase, because in the middle of the day, something can happen that can change the trend phase from one phase to another, which means my bias needs to change. So you don't have to call it a bias. I call it a bias because my bias literally changes midday some days, especially because of H4. Like P Money just mentioned earlier, he asked me and said, I could have taken another trade on GU. And he said, what? I said, sell. Why would I take a sell? Because the trend phase changed when we made a chalk. And my expectation was price to go back down, which happened because of news, and which it did play out that way. So my bias changes when I think the trend phase should change. But my bias could change 3 or 4 times in the day because I could think all these other times I thought, all right, I would buy here, right? Because I thought the trend phase would change. So it didn't. It came back. Then I would buy here. And then the trend phase didn't change. So I'll go back. All of this move really was the corrective phase. All of this move was the impulsive phase.
Got it.
But my bias could change in the middle of the day.
Yep. Could you pull up the chart on US 30 really fast? On the H4. So this morning when I woke up, I had a bullish bias, and then it switched to a bearish bias after the 830 CPI.
Mm-hmm.
I just want to make sure that was correct, and I'm not crazy for doing that.
Yeah, now it's probably should be bullish again.
Let me check.
If it's not yet.
Yes, exactly.
Yep.
So that's like twice my bias changed today.
That's the thing of using the 4-hour time frame. You're gonna have to get adjusted to that because it will change. It will change a few times. Daily tends to be a little bit more steady.
Gotcha.
All right, guys. Got time for one more question, guys.
So what pairs? So are you trading CAD JPY now?
Mm-hmm.
Okay, so you're trading 1, 2, 3, 4, like 9 pairs now?
I'm not trading all of them. I look at them in the morning. I make a watch list for the day and I only watch those that I choose from. But I mean, a system is very simple. I only trade no more than about 2 correlations per day. So I look at the pairs. If I can't see anything that I like, I move on to another correlation, see how the other correlation is doing. One day CAD gave me like 10, 15R. The next day GBP, JPY gave me 10, 15R. Like you just switch them out. So it only takes me about 15 minutes in the morning, now about 20, because I go through some of this list. I don't go through the whole list. Like I completely stopped watching gold. I have no desire to do that.
It hasn't been right for you.
Gold is, when you understand the properties of gold and after back testing, it's really good or really annoying. No in between. And right now, when things are uncertain, gold is not a great place to be. So it tends to consolidate more. And I was waiting for GBP's economy to improve anyways, before I would go back and trade anything GBP, because last year it was complete trash because of everything going down with inflation and interest rate hikes. And now that the economy seems to have smoothed over, I mean, I've always loved GUs. GUs were like one of my favorite pairs. You have to understand the financial things that drive investor decisions every year, because this whole thing is based upon human psychology. Like what are people thinking? What are people doing? Where do people think it's a good value? Where do people think it's overpriced? That's what technical analysis is supposed to help you to be able to tell. And you just react to what you see. Well, there wasn't much to react to with GBP because nobody knew how GBP was going to deal with the recession, or if they were in a recession, or who their prime minister was even going to be, or how was their parliament even going to work together. Like there was too many questions. So there's too many questions, and investors are bowing out. I bow out too. But each pair has its own characteristics, its own rules and things that you should learn about those specific pairs. You should spend time backtesting any pair before trading. I've backtested every single one of these pairs that you see on the list. I know how each one of them moves. I've probably done at least anywhere from 100 to 200 to 300 trades per pair that's on my list. So I get an idea of how they move. But because of that, I can swap things out as necessary, because I have tools that help automate my processes so I don't have to spend. If I didn't have indicators like I did, I wouldn't watch no more than probably 2 pairs, because you have to pay attention to small details. But if you can automate those things and keep your trading simplistic, you can watch more things. Eventually you get to the point where you can even create a trading algo that will replace you. And then you could go get it, sell it to a hedge fund and make millions of dollars every year and stuff. So, but I'm gonna leave y'all one last thing that I really wanted to talk about today, guys, based upon what that I saw. Real quick. It's about something I want y'all to take away and what y'all should be doing in your own trading. Give me 1 second. Let me find this picture that I want to post. Here we go. Okay. This is what's called the forgetting curve. It's a scientific theory based upon how people learn. The pink line shows exactly what happens naturally when you learn something, right? And what you're looking at is your memory retention at the top. Across this bottom axis is how many days it takes you to forget it. Now, the pink line is naturally what happens after the first time you're hearing something, aka this phone call. The blue line is what happens after each time that you happen to recall the information that we talk about, right? So if you're not seeing success in your trading, when it comes, something that could be happening is you're not actively working on the stuff that you learn, and therefore you're forgetting stuff a lot quicker. So instantly after this phone call, you should be taking notes. You should be doing things that help you to kind of retain the information and practice, put the things in practice. The more time that you spend away from the charts and doing things, what ends up happening is you end up creating a situation in which you are just going to forget the stuff anyway. So put it in practice immediately. Second thing we'll talk about, this is what's called the knowledge pyramid. This is what happens with information that you're given. If you look at things, you'll see how you actually gain knowledge and wisdom. So at the bottom is just data, right? So right now, y'all have some data, right? I'm giving you some information on things that you should do, rules, things that I do, etc. But you're going to lack the knowledge of how these pieces actually put together. That's what you have to spend your time in practicing doing. Once you spend enough time in doing knowledge and analyzing and understanding, you're going to have insights. You're going to have to understand. You're going to understand relationships. So I notice that people in community sometimes know market structure. Great, y'all have a bunch of information or knowledge sometimes, mostly information. But the actual insights is how does market structure work in the context of other things that you have in trading, for instance, supply and demand. How does it work with liquidity? How does it work with time frames? How does it work with pricing? How does it work with Fibonacci? Like there's all these different things that you need to connect together. The insights is where I see most traders struggle because most people go from community to community. They have a lot of information, maybe some knowledge if they practice it a little bit, but they don't really understand the relationships of how things work together. That's the question that you should be asking yourself. And then once you get to the point of having true insights, then we get it to a behavior change. A behavior change is when you can execute or you have the wisdom based upon the knowledge that you have. Does that make sense?
Yes, it does.
Now, the last and most important piece, let's talk about the learning period. How do you actually learn? If y'all have been just watching videos, congratulations. You probably only retain 20% of the information that you get. The most important thing that you can do is go put stuff into practice. So Solomon has the homework that he's doing. The homework assignments are helpful because it's practicing what you're doing. If you're just sitting here watching the videos of everything that we post in the course, it's not going to be enough. So actual demonstration like this helps a little bit. Group discussion. Y'all probably going to retain about half the information that we talked about today. But the real pieces that are going to help you to really take your trading in 2023, I'm sorry, to a new level is actually practicing. And then once you get enough practice, being able to teach others. So that's why communities like this is a great place for you to be in. Helping each person help each other really helps you to understand how much you really know or don't know. Make sense?
Perfect.
Awesome. All right, guys. I leave you with that today. I'll let you know when it's posted up. Within the next 24 hours, this will be posted. But until that time, guys, safe trading for the rest of this week. If you have any questions or anything that I didn't get a chance to cover, please ask me in the S&D questions. I prefer y'all asking questions inside the chat because you get different takes of information from different people. Also, somebody else in the community has that same question that you're asking, but if you ask me directly, somebody else misses out on the chance to learn as well. So I appreciate y'all guys, and good luck in your trading for the rest of the week, and we'll chat soon. Talk to y'all on Thursday.
Take care.